Hello, everyone. Welcome back to another edition of my weekend series dedicated to price action based technical analysis. Today, we will be diving into the intricacies of the GBPUSD market, where the last week's trading session showcased a predominant selling trend despite the UK's GDP expanding at an annual rate of 0.6%, which actually came beyond expectations. In our previous trading setup, we capitalized on the opportunity, securing a fairly 100 to 150 pips as price action retraced the bullish impulsive leg from the upper week. And here are the highlights in commentary for reference purposes. If you missed the commentary and want to catch up for educational purposes, you can find the link in the description box below or at the top right hand corner of your screen if you are watching on my YouTube channel. Well, given the UK's zero economic growth in the third quarter, a stark contrast to the United States, we will explore how the pound sterling may fare this week amidst recent downward pressure. As always, we will unravel the potential trajectory of price action for the upcoming week using simple and fundamental tools such as trend lines, key levels, and chart patterns. Well, before we delve into the details, it is crucial I emphasize that this video is for educational purposes only and should not be considered financial advice. My goal is to provide insight into the GBP/USD charts and enhance your understanding of price action analysis. Remember, Forex trading inherently carries risk, so always exercise caution and consider consulting a professional financial advisor before making any investment decisions. Without further ado, let's delve into the details. So we are going to be starting this week's analysis on the daily time frame where in fact I had to take into consideration the character of price action since the beginning of this year. And in fact, I'm excited to share with you a beautiful setup that we will be using to build our decisions ahead of the new week. And what I saw was this distinct key level, which is situated around the 1.2200 area. And in fact, if we go to as far back as December of last year, you will see how this level have played a major role in determining the direction of price action. However, since price climbed above the structure here in the month of March of this year, we have seen a situation where the zone between the 1.2200 area and the 1.20100 level had remained a buying niche for participants in this market, revealing how sellers have struggled to break through this area in the last 5, 6, 7 months now. Then, besides this key level and the demand zone, are this couple of descending trend line, which of course emphasize the character of sellers since the month of July after testing that high and connecting the series of lower highs. We have a descending trend line here, which projects the potential and strength of the sellers at this juncture. However, despite the series of lower highs here, the inability of sellers to find a lower low for me is a suspect and, of course, a red flag that buyers may likely be getting ready to push price to the upside. And in this regard, how do we intend to capitalize on the next move? I have a simple setup on the 4 hours time frame, which we will be using to project what our decisions will be for this week. However, before we go into that, let's run through the economic calendar so that we can familiarize ourselves with the fundamental factors that will be driving market sentiments this week. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So, for this week, based on the assets on our watch list, we will be focusing on high impact events from both the United States and the United Kingdom economic dockets. Now, the first impactful event for this week is coming in on Tuesday, November 14th, and that is the claim and count change from the United Kingdom's economy. Then we also have at the same time the employment change and, of course, the ILO unemployment rate as well. Then later on that day, we will be witnessing the consumer price index, which of course we know measures the inflation and impacting the purchasing power of consumers in the US economy. Then on Wednesday, November 15, we have the consumer price index as well for the United Kingdom. We also have the monetary policy report hearing. Then on that same day from the United States, we have the producer price index and the retail sales data. Then on Friday, we also have the retail sales data coming in from the United Kingdom. So you can see that we have a handful of impactful events that will definitely be influencing the market conditions. And as technical traders, we do know that the anticipation of this event alone also has an influence on the market sentiment, which would reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame. So now on the 4 hours time frame, as I only took into consideration the nature of price action in the last 2 weeks, and here I have a simple setup which we will be using to guide our decisions. Well, the first thing here is that key level which we identified on the daily time frame, which is very, very much intact here, had the 1.2200 level. And of course, you know how we use our key levels in this community. As long as price remains above the key level, we want to continue to look out for patterns and structures that supports the idea of buying that asset. Now, in addition to that key level is this ascending trend line after connecting the series of higher lows here, giving us a beautiful structure to guide our decisions for this week. And of course, when price remains above that ascended trend line, we do want to continue to look out for buying opportunities. Now, the most important feature on this chart is this impulsive move that started at the during the last week of the month of October, and we saw this move all the way into the 1.21, 1.24200 area before we started seeing some profit taking activities, which reflected on the chart as a retracement move, as you will see here. Now, the question going into the new week is, will this turn out to be a retracement phase where we shall be anticipating another wave of bullish momentum, or will it turn out to be a sell off where price will be breaking down the key level and the ascending trend line to incite a sell off? Well, to project how far this retracement phase might likely go, I used my Fibonacci retracement tool, run it through the previous impulse leg, and we were aiming at that area between the 50 and the 78.6% of the impulse leg as a zone where it's likely the retracement phase will end. And in fact, the appearance of a reversal setup here will be a good opportunity for us to join an uptrend move. So I'm looking at between 1.2200 area and the 1.21450 as an area to look out for buying opportunity. And one interesting thing about this zone is how it interestingly shares a confluence with that ascending trend line. So I want to see if the market will give me something like a reversal pattern. It could be a double bottom, head and shoulder, have our neckline marked out, then the breakout retest of the neckline will be a beautiful opportunity to join an uptrend move. So I still hold on to a bullish bias on the GBPUSD where I also have another level at the 1.22300 area. If price will break out and retest the structure, I will be looking out for buying opportunities. However, in as much as we're looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the opposite direction as well. So, what is it that we are going to see on this chart that will make us change our bias from bullish to bearish? Well, since we have our key level at the 1.2200 area, which interestingly shares a beautiful confluence with that ascending trend line, I'm of the opinion that if price will break down both the key level and the ascending trend line, then this could be a sign that the trend line may no longer have the capacity to continue to negate the bearish attempt, hereby giving us a reason to start considering selling. And if we do want to sell, I would like to see some confirmations like the inability of buyers to be able to climb back above the ascending trend line. And of course, this would reflect on the chart as continued selling pressure below the structures to incite a downtrend move. So you can see how crucial this current structure is, as whatever happens within this area around the 1.23 22300 level and the 1.21450 will be playing a major role in determining the direction of price action. But trust me, I will be with you in the comment section of both my trading view and of course other platforms to give you updates on how we are going to be managing our positions after monitoring how participants in the market will be reacting to this current structure during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a